Have you ever wondered if there's a simple yet effective way to make money in the stock market without needing years of experience? In this video, I'll break down a straightforward investing trick that helped me earn $1,000 in just 1 week. This method is beginner-friendly, requires minimal effort, and has the potential for consistent gains when used correctly. Let's dive in. The strategy: selling covered calls. One of the easiest ways to generate income in the stock market is through a strategy called selling covered calls. If you own at least 100 shares of a stock, you can sell an options contract to another investor, giving them the right to buy your shares at a specific price by a certain date. In return, you collect a premium upfront, regardless of whether the stock moves in your favor. Why this works: generates immediate income through premiums, lowers overall risk compared to other options strategies, works best with stable blue-chip stocks or ETFs, can be repeated weekly or monthly for consistent cash flow. How I made $1,000 in a week. Step 1. I selected a well-established stock with low volatility to minimize risk. Step 2. I purchased 100 shares of that stock, ensuring I had ownership. Step 3. I sold a call option with a strike price slightly above my purchase price, expiring within a week. Step 4. I collected the premium instantly, which added to my profits. Step 5. If the stock stayed below the strike price, I kept my shares and repeated the process. If it rose above the strike price, my shares were sold at a profit. Key tips for success: choose stocks that have a history of stability and steady growth. Avoid overly volatile stocks that can swing unpredictably. Select an expiration date that aligns with your profit goals. Consider reinvesting the premiums earned to compound your gains. The risk factor: while this strategy is relatively low risk, there are a few things to keep in mind. If the stock price rises significantly, you may miss out on larger gains because your shares could be sold at the agreed-upon strike price. If the stock drops, you still own it, meaning you could experience a temporary unrealized loss. Selling covered calls is a powerful strategy for generating consistent income with minimal effort. It works best for those who already own stocks or are willing to hold onto them for the long term. With the right approach, this simple trick can create a steady income stream while limiting exposure to unnecessary risk. If you found this video helpful, be sure to subscribe for more investing tips and strategies. Have you ever tried selling covered calls? Let me know in the comments below.